Hello everyone, today we'd like to talk about the financing news from the Financing Times. Our group number is 宇曼诗、殷明晨、景鹏李、思杰郭 and 向东蒋. The news title is Evergrande crisis leaves Chinese developers shoot out of global debt market. Firstly, I will briefly introduce this financing news. Evergrande is China real estate company that failed to pay 83.5 million in the interest due to a lot of debt. The international bond of the Chinese developers have almost crashed. About one-third of the outstanding dollar debt of about 16 developments in China may be falling in international financing, weakening the flow of transaction. The developers' breach of the contract is very serious. Evergrande default offer led to an increase in financing cost for Asia high-yield bond issuance in the third quarter. China encouraged development to lend, and the issue may removed or may affect the industry's refinancing. Deteriorating credit will promote credit to seek early repayment. Now, let's move to the next part. Let me introduce the background of this news. Evergrande Group is a Fortune 500 company integrate real estate, financing, health, and sports. The total asset amount to trillions, and the annual sales volume exceed 400 billion, of which the annual turnover in 2020 is 477.561 billion. And it is a listing company. Its main financing methods are debt financing and equity financing. This financing news mainly involves the relative knowledge point of the topic two. Authorized deposit-taking institution. Topic 4 is the equity market, and topic 5 is the money market, and the topic 6 is the bond market. Now, I'd like to give the stage to my teammate, Yiming.
Hello everyone, thanks for my friend's introduction. Today I will analyze the news about Evergrande debt crisis. Evergrande, a fourth real estate company in China, are under the serious debt crisis. Recent time, Evergrande missed an $83.5 million interest payment and caused a negative impact in the global financial market. I think I have obligation to analyze the origin of crisis, why Evergrande were under the trouble. At first, let us see the Evergrande debt financing record. In the recent years, from the 2019 until now, Evergrande experienced four main financial activities. The first time is on October 2019. Evergrande announced the issuance of bonds due in 2020, 2022, and 2023 with interest rates of 11%, 13%, and 13.75% respectively, raising a total of $1.8 billion in debt financing. For the second time, on November 2018, Evergrande announced the issuance of the additional $1 billion in bond with an interest rate of 11%, which was integrated into a category of bonds maturing in 2020 with the aforementioned 11% interest rate. The third time is on January 2019. Evergrande again announced the issuance of additional series notes maturing in 2020, 2021, and 2022 with a total financing of $3 billion with the interest rate of 7%, 6.25%, and 8.25% respectively. The fourth time is in April 2019, Evergrande issued an announcement to issue $1.25 billion senior notes due in 2022, and a small number of senior bonds which due in 2023, 2024, the rate at 9.5%, 10%, and 10.5% respectively. Some institutes have noticed that this is Evergrande's fourth issuance of high-yield US dollar bond. According to knowledge we learned from the class, we know the higher return means that Evergrande cannot lend money with a risk-free return, so they have to promise a higher return for creditor, and also credit faced to a higher risk to face the overdue. Recent years, financing record is shown above. However, Evergrande's total liability is more than 3,000 billion, equal to 3,000 and 1,000 million. It is a horrible number, and this is a general performance which exists in Chinese real estate company. Most of real estate companies have a huge number of liabilities and higher debt leverage, and also they not only lend money from bank but also from citizens. Some financial agencies have secret channel to absorbing individuals' cash, but it is a crime activity in China. Of course, the rate is far beyond the common bond. It means that a large number of real estate companies' potential hidden danger is linking with people. It is easy to imagine if real estate companies burst into potential danger, financial institutions in the public will under the impact. So in order to reduce the hidden danger, Chinese government announced a document, and we habitually call it three bottom line for real estate companies. The first line is debt to asset ratio mustn't larger than 70%, expect to prepaid expenses. The second line is liability to equity ratio mustn't larger than 100%. The third line is cash to current liability ratio mustn't less than 100%. The aim of government is to reduce the real estate company's total liability with interest. The policy will be active in January 1, 2021. However, the policy triggered a series of chain reactions. China Guangfa Bank required Evergrande's prepayment of debt, which total amount is 132 million. But the bond is due in 2022, so Evergrande suing the China Guangfa Bank. It is a very bad signal because 132 million is a small number of money for Evergrande. It is a signal of financial institutes and investors lost their confidence for Evergrande. And what of the specific impact for Evergrande? And Jinpeng will tell us in his part. So, next part, welcome to Jinpeng.
Thanks, Yiming. Hi everyone, I'm Jinpeng. In my part, I will analyze the financial crisis of Evergrande and the possible impact of the crisis. According to the internal report of Evergrande in 2021, we find that Evergrande Group has $305 billion debt, including $7.5 billion bond due in 2022. When the outside world is not optimistic about Evergrande's ability to repay its debt due to the inconsistency of the interests of the debt holder and the shareholder, this will lead to conflict of opinion between the two groups of debt holder and shareholder. This will eventually lead to debt holder will limit or prohibit Evergrande action to ensure that Evergrande can allocate enough funds to repay their debt, such as Evergrande has already considered its special dividend on July 2021. Because according to the order of ordinary claims, the priority of the debtholder rights is higher than shareholder. The special dividends can bypass this order. The Chinese government may also intervene the Evergrande debt crisis. If Evergrande were to collapse, this could spread to other property developers and create systematic financial risk for the banking system of the world's second largest economy. Systematic financial risk refers to the risk that the single or small number of financial institutions will go bankrupt or hugely lose due to certain factors, and lead to the collapse of the entire financial system, which will have a serious negative effect on the real economy. Once this kind of risk occurs, all entities in the market will not be spread. Therefore, in order to protect people's livelihood, the Chinese government will also respond accordingly to this instance. Some scholars even believe that the Evergrande debt crisis will once again trigger a new round of subprime mortgage crisis, which will affect the world's financial system. Okay, that's all my presentation. Now please let me introduce my next group member, Shijie. He will focus on the impact of Evergrande on the global financial markets.
Thanks to Jin Peng, I will illustrate the global voice to the Evergrande crisis. As I mentioned before, Evergrande, which faces a $20 billion pair of dollar-denominated debt, has based 5 deadlines on payments to offshore bondholders. Besides the Evergrande massive amount of debt defaults, Fitch predicts that China's real estate sector has outstanding cross-border bond issuance totaling $232 billion by the end of September, and around a third of amount is expected to mature before the end of next year. As the rating agency downgrades the rating of Evergrande and its peers, it will be difficult for Chinese developers to seek further refinancing in the global capital market. However, the global capital market believes that even the crisis of Evergrande is tremendous, it is not enough to pose a systemic risk. Evergrande's bonds, for example, will suffer heavy losses and mature next year at less than 30 cents on the dollar. But investors' losses will depend on the price they buy. United Bank of Switzerland explaining why its fund were holding on to Evergrande's bonds. They indicated the bonds were trading at or below typical historical recovery lows. Moreover, for the equity market, the fallen SP 500 can be analyzed as various sources of stress. For example, economic indicators had been going sideways recently. The Federal Reserve announced to buy fewer bonds and so on. All facts illustrate that the crisis of Evergrande is not as catastrophic as the news information. For long-term investor, we can see SP 500 performed remarkably well since it gained 29% in 2019, 16% in 2020, and 18% so far in 2021. Moreover, the fallen price of Evergrande can be proved that the expected future dividends do affect the share price. And the behavior from individual investors illustrates the behavioral finance hypothesis focused on the psychology of markets. And let's move on to Xiangdong's summary part.
Let's summarize. First, we got the main content of the news and background. As we knew, Evergrande faces huge funding shortfalls. An international bond issuance by Chinese developers has all but halted. And then, according to our study, we know that the origin of the crisis was default on interest payments. Crisis also influences investment direction and financial systematic risk. Finally, we discussed international influence on Evergrande and equity market reacts. All of them are analyzed with what we are learned from capital market. For instance, the downgrade of Evergrande credit rating further complicates their ability to finance, which from top 6 bond market, insurance bonds into the debt market to raise funds, and conflict between debt holders and shareholders because debt holders have priority over shareholders, which from top 2. From topic 4, we know that Expected future dividend influence share price. Also, there are some other capital market concepts, like the Basel Accord and behavioral finance hypothesis. That concludes our presentation, and thank you for your attention.